Okay guys, big event today and one that a lot of people have been waiting a long time for, as Coinbase is due to go public. They're going to be jumping on the Nasdaq and getting that coin ticker, COIN, I think it's a cool one. And with over 56 million users, they're one of the top crypto exchanges in the world, which means obviously that there's a lot of hype about them going public. Now, since the crypto space, relatively speaking, is still a bit of a dark industry to the more traditional world of finance, this could go some way to helping legitimize the industry, although it must be said that institutions and big companies are already beginning to dabble in cryptos. And a lot of cryptos have seen some amazing performance this year, which is adding even more to the hype right now, and we can see that being reflected in Coinbase's numbers. They released a preliminary earnings report last week ready for the listing, which showed that users had increased by 117% in Q1 compared to Q4, with trading volumes also up 117% compared to the whole of last year. So that translates to $1.8 billion of revenue for the first quarter of this year, which already way blows out of the water last year, which was $1.3 billion for the entire year. Now, since most of their revenue comes from transaction fees, things like commissions and spreads, it's not particularly a surprise that their revenue is tracking all of that hype right now in cryptos. But that could also mean over the short term that rapid growth could be limited. I think over the long term, we can expect that the crypto space is still going to continue to grow, but at least short term, if the big cryptos did fall in price, so would the hype to a certain extent and Coinbase's revenue along with it. So to quote their CFO, to state the obvious, our business is hard to forecast. However, this could be an answer for investors that want to invest in cryptos, but they think they're too volatile or they're not quite sure what they're doing with them. And since Coinbase's revenue is tied to trading volumes, it probably doesn't matter which cryptos end up doing well and which ones don't, as long as the overall crypto space is doing well as a whole. Now, they haven't yet announced a reference price for the shares, but Axios reported that they did try to find a price for the public offering early in the year by selling some shares on the secondary market. So the first batch valued the company at a massive $54 billion, but then later batches valued the company at an astronomical $100 billion. In fact, over $100 billion, which would make it the highest valued tech company since Facebook went public in 2012. But of course, these valuations might not hold up. It was a few months back. But let's keep in mind, this was also before the big boom in cryptos this year, so it could end up being even higher. But in any case, it's pretty damn impressive considering they were valued at just pocket change back in 2018 of just $8 billion. What a tiny company that was. They're also staying true to the crypto anti-establishment narrative. Not only are they not really doing interviews with traditional media, they're preferring to do a live stream with their investors, but also as they look to go public, they're doing it through a direct listing as opposed to a more traditional IPO, which would require the help of investment banks. So direct listings are usually more for companies that aren't really looking to raise capital, as new shares aren't being issued, but it does mean that existing shareholders can now sell their already existing holding directly to the public on the market, so they can get some sort of return for that investment that they've made. So if you're looking to invest, you might think that all of this right now sounds like a pretty good idea, at least so far. But they could actually end up running into some challenges as well, and the big one is going to be regulations. So at the moment they operate as a money service business, or an MSB, which means that they need to work with regulators, but their trading activities aren't actually formally supervised. Now, in an FT report, they said that if their regulatory status was to change, they could have to drop some profitable parts of the business or risk having much higher operating costs. Look at the CME or ICE, for example. They aren't allowed to take principal positions to facilitate liquidity on their platforms. Instead, they rely on third-party liquidity providers. But Coinbase, on the other hand, does match client transactions and acts as a market maker, which makes up around 11% of their revenue. Now, this is a pretty big risk in itself, and it does pose a conflict because they're taking the trades on the other side of their clients. According to the FT again, another problem is that they engage in prime broker type activities, which again, they're not regulated to do, and most conventional exchanges aren't allowed to either due to conflicts of interest. But despite these issues, hype can be a very powerful thing, and alongside the fact that they're actually a profitable tech company, which is a rarity in itself, it could be a very good day for them and their investors. One of which is the rapper Nas, who apparently had an early investment in 2013 of between $100,000 and $500,000, which means that he's set to make $100 million today. However, as we all know too well, hype alone doesn't last, so time will tell whether these high valuations can hold up. But anyway, let me know your thoughts in the comment section on the Coinbase situation. Will you be looking to invest? Are you already invested in cryptos? And would you like to see more videos on cryptocurrencies on this channel? If you would like to, then please do hit the like button to let us know. Thank you so much for watching. Have a great day, and I will see you in the next one. Take care.